Everyone, for market minutes today, we're going to look at RH stock. I have no idea what this is. I just saw that it was trending, and I wanted to look into it. So I always do three things. I like to look at their latest earnings, which it looks like it was today, their current valuation, and then other elements to consider. And I'm going to I'm going to start looking at the total shares outstanding as part of the other elements to consider to kind of look at that. That is important. So RH, yeah, let's have some fun and just go straight to the numbers. I have no idea what it is, but we'll look at that later. So we can see right off the bat, they're using a fiscal year, not a calendar year. So not that it matters, but kind of interesting. You have a gross profit. It's nice that they have this in a percentage for us. About 42%. That's a nice gross margin. I have to see what industry it's in to kind of compare it to competition, but a nice gross margin. But then it looks like immediately G&A takes a large cut of that, which then puts their operating income all the way down to 11% of their revenue. And then they have a very high interest expense, which makes me believe immediately these people probably have a lot of debt. And then they have this bag of other expenses, and then your income tax right here to make them come out barely with a net income. So, okay. That is not terrible. I just want to look real quick at their, so their cash position doesn't look like it's super high, but I want to look and see their debt. Yeah, so here's their debt right here. Looks like they have a lot of debt when compared to their cash. So right off the bat, I can see this is a very leveraged company. And maybe it's a part of just kind of what they do. So we'll go look at the valuation right now. It has a relatively low P ratio if you're considering these stocks. Its competitors, I guess not really. Whatever WSM is here, and 5, but I'll chuck that in the other elements at the end here. But I can see right now a market cap of $2 billion for their net income for this quarter was, I think, like 25 million. So that puts their P ratio around 20, which is not terrible. Let's go look at some of these news pieces. What is this company? Let's see. Fourth quarter disappointed. Okay, so it's in the housing market. Interesting. Is evidenced by revenue growth. That's probably where a lot of their debt's coming from, I bet. Furniture retailer, which we saw the revenue here, so the net income, and then 54 million in free cash flow to a negative. So that's a positive. Minor revenue decline. Down, yeah, shares are down 20% in after hours trading. Wow. Okay, so it's in the retail, furniture retail. Let's go to ChatGPT. Who are our RH stocks' biggest competitors, and how do their PE ratios compare? Thank you. Premium luxury home furnishings. The only one I recognize on this list is Lowe's. I don't recognize any of the rest of these. Okay, so this is giving a PE ratio. So this is giving a little different PE ratio than what we just saw on the previous page. It's probably taking like a year average. And according to this, it actually has a higher PE ratio than its competition. Trades at a premium. Okay. All right. So that is not great. Why would someone be bullish on RH stock? I always think it's fun looking at these stocks I just never even heard of. Luxury brand, pricing power, higher margins, which they had a decent margin. Long-term expansion story into the international market, accelerating growth. Okay, strong margins, improving cash flow, which we saw that. Cyclical, high insider in ownership is bought personally. Have insiders been buying or selling? Mostly selling. An important buy. I'm going to bet that buy was the CEO buy I was just telling us about. Okay. Or I guess not. Okay, so that's not great. Yeah, I'm not seeing. Okay, here's this. CEO bought some. 25% of the company. Wow. Okay, one last question. How much debt does RH stock have? And yep, and this is what we saw, a lot of debt. 4 billion in the yep, same thing that we just saw in the earnings. That's highly leveraged, debt heavy capital structure. Long-term bonds and notes. So yeah, I don't know that I'm a big fan of this stock even after the 20% drop today. It looks like it's been on a downturn for basically since the beginning of the year. Pretty volatile though. Look at this. From 41 up to 230 again. Now back down to here. It's pretty volatile. Goodness. Oh, this is during that kind of COVID time where everything was kind of in a bubble. Hmm. Well, I don't know that I would be interested in this stock. It just seems like this is like a long hold for a probably not the best return. From what I can see, I think there's probably better opportunities than RH. Just based off of the debt and then the revenue. I mean, I guess we can look at the revenue growth real quick. How much did you grow year over year? Well, this will be the last thing we'll look at. So 5% year over year growth. So they're still growing at least, but they would need to grow quite a bit to get over that debt. So weak housing market. I personally think the housing market will only continue to get weaker. So yeah, there's RH. My consensus on it, I don't think it's like a terrible buy, but I think that in terms of what I usually look for, which is big upside, I think there's probably better opportunities out there. So there you go. There's RH.